Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly, although a little bit weird and laggy. Just as a heads up, before we get into all the fun stuff, there are some crazy storms. I don't know where the heck these things rolled in from, but there's some lunder and lightning. Nice. Thunder and lightning going off like crazy around here. So just as a heads up, if all of a sudden my voice disappears, well, that's probably why. So anyway, hopefully everyone's been able to rest up and get ready for the day ahead, and you know, all the usual hubbub. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. And just a quick note for you all before we jump in today, if you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. All right, let's see here, hang on. Perfect. Okay, just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Welcome to the SSFTG fam. I'm super excited to have you all on board, and yeah, it's there's plenty of material to work through, so start digging in, and of course, if you have any questions, you know where to get a hold of me. If you aren't a part of the SSFTG side of the family yet, there are a ton of different ways to join up. The easiest way is to join as a YouTube member with the join button below the stream there. It gets you in the chat room and the YouTube community boards, stock and crypto chart posts, and all of that fun stuff, plus a bit more behind the scenes and what's going on. Of course, if you want to understand how we do everything, check out the Day Trading Academy, along with everything else that we have over at SSFTG.com. So whether you're here for the first time or the 1000th, good morning, welcome. I hope you're all ready to rock and roll alongside of me, rolling into the end of the week on this Friday. Let's take a look at some of these crazy markets, take a look at some of the news, all that fun stuff, and let's get rocking and rolling. So as far as the morning levels, don't forget, obviously, to grab your morning DP levels. Those are posted for you on the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Oof. We're back on track. We got it again. Looking across the board, I mean, the NASDAQ and the S&P both moving in tandem, about up 0.8% from yesterday. Gold, I mean, there's a lot of back and forth going on, but as far as percentage movers, there's nothing crazy. But, well, yeah, that thing, that can definitely change, given all the stuff that we've got going on today. Now, earlier today, we had the 8/30 unemployment rate. Forecast of that was 5.1%. There was also the non-farm payrolls, which come out at 8:30. The forecast for was 500,000, rather. There is no other news that we really have to worry about. The news is pretty calm and quiet after that. So, I mean, really, all the big stuff's kind of done. Now we can go into sort of the end of the week, wrap things up, and rock and roll without having to worry about any news or any other stuff. So, let's get that out of the way. Take a look at some charts, see what's going on here. It seems like Shiba Inu is screaming off to the to the sky again. Boy, howdy! All right. Well, we were talking about a little bit of a dip and a buy back in on that Shiba. And now with this pulse higher, I look to take a little bit of profit off the table again. But this thing could go absolutely bonkers if they can break above the highs. You've got the 3,000. They got a lot of stuff on Shiba to worry about. Anyway. Looking at NASDAQ first and starting off, we do have the higher low transitional phasing going on here. And after the higher low, we have broken to a new high. And we are maintaining a higher low above that. That's everything that you need to see for an impulse. Pretty straightforward here. We've got a wave 1, wave 2. Wave 2 was real deep, but pretty decisive. I mean, there wasn't a whole lot of messing around there. That leads me to believe that this is either not wave 4, because wave 4, typically when wave 2 is so sharp and decisive, wave 4 is going to be a train wreck. And the overall sizing of wave 4, yes, it fits an impulse rule, and yeah, if they go up to a new high, whatever. I mean, it fits. but that just doesn't fit the bill for me, right? To me, that would make more sense that this is still part of Wave 3, and we're getting more continuation up, and we really haven't seen Wave 4 and Wave 5 yet. This really wasn't much of a pullback. I mean, if we really look at it, it just kind of went sideways down to the previous low and bounced right back up again. So, I mean, really, I'm just not convinced that this is Wave 4. It doesn't fit the bill, really. Hey there, Steven. How's it going? Everybody else so far? Good morning, good morning. Over on the S&P, I mean, the S&P, we've been talking about that wedge breakout continuation, all that, and this is really the big thing that we've been waiting for is, well, you know, okay, yeah, we've got this 1, 2, 3, 4, 5 little wedge, and now we finally have the break above the top. Really nice wedge structure, possible reversal, but the big thing that we were concerned about is, if you remember going back, you've got Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. The top of Wave 4, that's a big hot spot that the market is going to try to pressure back down against. And, well, there was some concerns that when we broke back up and failed all the way back down and they weren't lining up, there might be some issues. Until, more recently, if we zoom in real close, you'll notice, right there, those big Jumbotron wicks. We've got sellers who are stuck, possibly, or longs who are buying in massively aggressively on this rally higher, so much so that it's creating huge rejection wicks on. I mean, this thing could really start juicing to the upside. I still don't think this is Wave 4, but this does open up the possibility of maybe a swing gap objective to the nearest swing to the widest swing. Would give us upside objectives all the way up to 44.66. Oops. 44.66 to, let's see, 44.45. So that's kind of the upside objective that bulls are going to be looking for as far as targets. And we still have plenty of room for that. And that might not, I mean, again, we might not see Wave 4 until we achieve that. I'm not convinced. I'm really not. But either way, bulls are still trying to rally to the upside, nice and aggressive. Gold is just ripping off the Band-Aid. Holy crap. So yesterday, in the last couple days, gold has been an absolute train wreck. Where we initially had some longs, or hopefully not sellers, but probably some sellers getting stuck at the bottom and getting just thrashed to the upside. After they broke up a little bit further, we start seeing them top weight a little bit more, which likely is sellers trying to average out of their positions. And if we look at the overall move to the downside from the POC, we can see that they were able to achieve a 0.5-to-1 scalpers objective, and, well, that's really about it. Once the market started coming down, they were never really able to achieve a 2-to-1, and they broke up to another new high. Once that new high hit, we can see that, once again, all they were able to achieve is a scalper's objective, a 1-to-1, barely, and then it went just screaming all the way back to the upside. So, obviously, if these are shorts, they're not hanging on very long. Right? They're jumping ship pretty quick. If we roll this up to the next new high, that gives us a POC, which is right around settlement, but at 1758.3, and settlement's right there. Really, we've just kind of had this sideways consolidation, wedge top, maybe trying to get a channel going to the upside. I mean, it doesn't matter what structure it was, this is breaking it. So that's the important part here. If we go across all the way now that we have that confirmed high, we can go from the this top all the way up to the next broken high. And that will give us the confirmed POC, which is right back in the same spot. There's no change. So 1758, that's the hot spot. If the bulls are going to win, which it looks like they're definitely making a valid attempt, then realistically we have to assume that their stops are, well, they're probably projected underneath the lows. So first scalpers objectives are going to be right up here, which we've already surpassed. Now, notice one thing that hasn't happened yet. Oh no, it has. It was a little bitty candle inside there. They did close above it. So the bulls are closing above the major scalper's objective, which means that the next target would be a little bit further up. 2-to-1. Now, 2-to-1, that puts us right back at the swing highs at 1833. Are you kidding? Oh, baby, that lines up really nice. So Now, we might not make it way up there, but it's really nice when you have all of those things stacking up together. Very interesting to pay attention to. And gold is definitely juicing up for a possible blow-off here. This thing's going crazy. Looking good. Crude oil ended up just being a gargantuan V-bottom. After another V-bottom, after another V-bottom, after several V-bottoms along the way. Crude hasn't really stopped V-bottoming on every pullback that it's had. And even within these micro pullbacks, there's still V-bottoms inside of there. You got one there, really quick drop there. You've got another one there, quick one there. Got another one here. I mean, they're all over the place. So it's not really much of a surprise then to see this churning so aggressively higher once they gain traction. And that seems to be the important part. They've got to gain the traction. You know, like here they tried, but they just couldn't follow through. Here they tried, and then they did follow through, right? So they're just kind of waiting for that follow through. Here they broke down, we're trying, and now we're breaking up. They have a very strong reason to believe that there's continuation. And you remember last week we were talking about the 80s and how crazy that sounded. They're here, knock, knock, ding dong, we almost made it, you know? So the fact that we had this really sharp, aggressive move off of the top just would make sense that bulls were taking profit ahead of the large 80s. If we look at the overall volume structure from bottom to top on the initial drive, come on now, there we go. You can see what's going on, right? I mean, it's fairly obvious what's happening here now that you put the order flow on there. That should ring-a-ding the bells a little bit. We have this overall breakout to the upside, and if these are longs, they were successful in the rally higher. First objective for them might have been here. Maybe that was their 2-to-1s. After that, 3-to-1s. I don't know. However they decided to structure it. But obviously, orders started hitting here. Now, they didn't shift the POC up, which suggests that the longs are still long. Now, obviously, if we move the POC a little bit further forward, I'm sure it shifted. But we're looking at just the impulse, right? From the bottom to the top. How did the market respond before it started pulling back? They created their base at 75.20, and they haven't transitioned off of that base. So when the market pulls back really sharp like this and bounces off of that point and V-bottoms, I mean, it's what it's been doing over and over and over and over and over again. So with this crude oil continuation to the upside, that's why we've been talking about swing longs for the last couple days, because they just make sense. But the problem is, it's kind of done. You know, like, we're back up to the highs. What else is there? It's not to say that it can't keep going, obviously, but the bulls have already reloaded in. They've bought the dip. They BTFD'd hard into that one, defended it aggressively. We're back up to the highs. Why wouldn't they take profit again into the upper 80s? You know, and then see if it wants to transition above there and maybe buy more in the next breakout pullback. It's just the way that this is kind of being designed here. It looks like we've got some really good potential for this thing to keep going. And every time that we've had a sharp V bottom that's continued back to the upside, it hasn't stopped for a while. So, I mean, if we're looking at it from a wider perspective here on crude, not to say that I want expensive gas or anything like that, and I doubt that's going to happen going into winter, or at least on my neck of the woods, but that does project upside targets with measured movement up to $80.40 or so. It's almost there. I mean, what better spot to reload in and then unload the whole lot right into the major objective? Get everyone buying it up, thinking that we're going to go into a major rally to the upside just to see it collapse down on them as you're taking profit into the buyers. Yeah, huh? I don't know. Crude's got me nervous up here. We're not in a swing zone anymore, obviously. That's already taken place. Where we are now is kind of waiting. It does look like a nice little spike into a spike in channel. So a corrective phase back down to settlement, back to the 78s is possible, maybe before the break of the highs. Once it starts getting up there, though. Hey, laddie, how's it going? Good morning, good morning. Over on the euro, I mean, rinse and repeat, right? Like, I'm gonna have a really hard time trusting the euro for a minute. I'm gonna be honest here. This thing just looks like it's going to try to reverse higher multiple times and then just whack-a-mole all the way back down into the floor. Over and over and over again, since the top that they put in back in early September. The bulls tried to rotate back up. They failed. They failed. They rotated down. Failed. Failed. They got, the first time, they got an actual new high, and it immediately obliterated all the way to the downside. I mean, look at the response first, and then the secondary follow-through was a little bit extreme. I mean, any time that they get a new swing high of substance, it fails. So that leads me to believe, then, that we might have some upward momentum, but I'm going to start looking for shorts up in these swing highs. That's where things get pretty interesting. Hey, Brad, how's it going? So the zone of interest at the moment would be on the euro for the downside continuation. And it's a relatively wide zone. That's a bit of a bummer. But it's going to be up there. Oh, God, I hate that red. But still, got to be eyes out. Hey, Vicky, how's it going? Good morning, good morning. For everybody else rolling in so far, good morning. We've got Bitcoin rallying up to a quick new high into the 56,000s, pulling back. Not a huge surprise. I mean, really, if we're being realistic here, with Bitcoin rallying up to the highs, first off, we know that Bitcoin did what we wanted it to do from the perspective of something it hasn't before. That's a freaking mouthful. So let me go out to the daily and kind of explain. If we're looking back historically, and we can't see it from here, actually. I'd have to do it on Trading View. But on the wider perspective, over here, there's Shiba, sorry, that's the area that we were talking about re-upping in the longs, is down in the 2240s. Pretty nice little bounce there, about a 20% start to the day, we'll take it. Anyway, over on Bitcoin, if we go out to, I mean, we got to go way out here, okay? So like a weekly, and we're looking at Bitcoin on, oh man, who's going to have the most data? Bitfinex? Kinda. They go back to when it was in the 280s to thousands at least. Alright, well, if we're looking at historically what takes place here when we have these peaked highs, every single time we have these peaked highs historically, they are lower high, lower high, lower high, lower high, lower high. That was a trap, but didn't break the previous. If we go back, before that, lower high, lower high, lower high, lower high, until things started finally reversing. Now, the reason I say this time around is incredibly different, because we don't have that anymore. Right? We don't have lower high anymore. We've got lower high, wait. What? This is breaking down historical structure. This hasn't happened before, not unless this goes rocketing to the downside. That would be the only way that we could still significantly say that, okay, it was just a bigger lower high. And that would take a big rotation down. You're talking collapses underneath 30,000, then we're starting to get those dips back into the 20s, 17s, maybe even the 12s, those real value pullbacks. But historically, we have not seen this. This is new. So, unfortunately, the edge that we had from before, utilizing historical information to our advantage, is no longer valid. That is not the case at this point in time. We shall see. Over on Ethereum, still rallying to the upside. Nice bullish continuation. Higher low, all the same stuff. Good breakout, nice spike in channel. If it is going to pull back, a pullback zone of interest would be back in the 3,300s to 3,200s. That would be the spike in channel dip point. Nice spot. After that, I don't know. We'll have to wait and see. Give me 2 seconds. I gotta get my sweater. I'm freezing. All right. Holy crap, gold. Ooh, man. Gold's got some spice to it. Well, looking at the internal picture on the indexes here, and kind of going at what oh, gross, what they've been doing on the pre-market. Hoi, not anything pleasant, that's for sure. Started off the day with a disgusting bear cycle to the downside, although it did confirm and complete. After that, we had that cycle back to the upsides. We've got the break confirmed complete. From there, that got a little bit funky. We had that wave 1, wave 2, really aggressive wave 3, 2.5 into a wave 4, monster blow-off wave 5. Now, I don't know if that necessarily qualifies as a wolf wave. I believe it does. Once it starts getting back inside, right? That's not. Usually I like the ones that look like wedges, personally, but this is I think that qualifies. Got that big blow off on the highs, big dip back down inside, lower high. They're starting to transition. Now, does that mean that the sellers are going to take over right this second? No, but we have completed a 5-wave pulse to the upside, and it's likely that at the very least we transition sideways. That could just be sideways wedge. You know, but as it stands, what better spot, unless volume tells us different? Yeah, I was going to say, what better spot than a dip back down to settlement? How many stops do you think are underneath this low? It's a non-confirmed low. But how many stops do you think people put under there? I'm willing to bet a lot. So, this is an area of swing potential interest. It's for the longs. The probability is not great. But this is a zone of interest where buyers know they can buy in with limited risk for major reward versus risk. Big hot spot there. As far as the S&P goes, I mean, honestly, we're probably going to see this same thing-ish. Oh, God. I mean, I guess they got to, again, here, bear cycle down, break complete, trying to reattempt back to the upside, break, really aggressive, kind of grindy break, but finish the job off. This thing's just sideways. I mean, that's all it is. Do you still think we drop down on the NASDAQ to fill this 14,750s to 850s? From the wider perspective, if we look at the NASDAQ zoomed out down here, if we're going to get a dip down into like the 750s or 850s, that would invalidate an impulse move to the upside. So for the bulls, that would be terrible. that would effectively invalidate their reason for going long with a trend, because if it's invalidating the trend, then they've got some issues. So, I mean, bulls don't really want that pullback to happen. The 850s, sure, that's fine, right? But if we start breaking inside those swing highs, where is that? That is at 758. That would cause some problems. That would be too far. So, really what I would like to see, and what this more so looks like to me, is that this, I don't think, is actually wave 4. I think this is all still part of wave 3. This is a sideways consolidation in a smaller 5-wave structure that is now completed its pullback, and it's looking for the continuation up. I think a much more logical point of interest for bulls to target would be like the 15,190s for C. Then start wave 4. And maybe from there they can pull back to that same low, that same area, but I just don't think this is done yet. And that would still, mind you, keep a valid impulse to the upside. So, I don't mind 850. I've got some issues with 750, but hey, Duncan, how's it going? Ben, everybody else, good morning, good morning. Bram, hey, hey. What do you think is next? Well, I mean, first off, this pulse to the upside on SHIB is something that we were kind of discussing a little bit in terms of a shorter term pulse to the upside, which get rid of that. There we go. That makes sense to see initial profit taking back into the previous area of volume. If the buyers were trying to buy in on this initial dip, thinking that this was going to continue higher, what better spot than down here? I mean, you can see where they were building in. So they obviously got decimated. So if the market's going to rotate back up, what better spot? Those traders are being thrown a bone right now. So buying down here on that shift, on that transitional phasing, whether it was a wedge breakout, whether you bought the whatever, the area of interest down here, that was the zone for the continuation up. We're now in a logical point of interest where we'll see some profit taking. Doesn't mean it has to stop here, but... we'll see what they want to do. There's a gap in volume from 750 to 850. I was wondering how you felt about that price discovery. That's the thing that makes that area really kind of treacherous, because they left it as a wide open door. I really want to be bullish, but if they close that door, it's game over. I can't in right mind be very bullish. It's not that they couldn't go back up to the highs. They could, but I'm not going to expect them to go flying through the top if that were to happen. And then just as a heads up, going into a Friday, there's not really a whole lot as far as the news calendar is concerned, and my son's school needs some help, volunteer help. So I'm going to be ducking out, and well, not early for you guys, but effectively what I'm getting at is I'm going to, instead of rolling into the extended session, I'm just going to keep the morning session going for today, because I'm probably going to have to duck out at like 10:10 anyway, and it's just not worth switching over. I would rather just keep it going today and roll into the weekend, hopefully happy. So just as a heads up. If anything, you guys will just have a benefit, but for me, I'm going to be out of office a little earlier. Crude oil grinding its way back up to the highs. Not really much going on from the perspective of the wider side of things. The deeper pullback is the much more beneficial zone. Same goes for the S&P. Except this thing's just a monster wedge. Range, whatever. 1 minute until the open. We're starting to get that transitional phasing. What about the volume from the top to the bottom? 30 seconds until the open. That was not a double bottom. Interesting. All right. Market opening up. Crude oil with a really strong pulse to the upside. The NASDAQ looks like it's still having some trouble, but they're trying to get it to go back up. Crude oil breaking through the highs, trying to rush off to the 80s. Man, crude oil caught a lot of movement to the upside there. First dip into this zone of interest for the bulls to grab a pulse back to the upside. First objectives off. Jeez, oh Pete. Still bouncing around, not really doing a whole lot. Looking to see if they can break above the 920s. That's the hot spot. If we struggle around the 920s, then chances are it's going to grab a little bit of a pullback down towards that settlement area again. Sheesh. 16s, 18s. Come on, pop the 20s. Pressing it. Having a hard time. I've only got the one. If I had more contracts, then I'd be able to hold on for more, but I tried getting more, but it went so freaking fast. I couldn't get any better prices. Nice little secondary target, though. S&P trying to reverse back up with a giant bull engulfing candle. Holy crap. NASDAQ's going to have a jumbo wick on the base. Well, if there are, I didn't have a chance to get more than 2 on that, but upside objectives next up would be back in the 940s. But, I mean, really, if we get a halfway decent bounce that wants to follow through here, we've already obviously achieved the half to 1 scalp, and all of those are done. The next target would be a 2 to 1, yeah, which is around 944. And then from there, you've got the 3 to 1s, which are just inside the highs at 62. I don't think 5 to 1s are going to fit in the highs. No. It'd be just above the top. I did not get that many contracts. Shiba pulling back a little bit. Obviously, buyers taking profits. Not like it's a surprise. This is also the same spot where those earlier bulls on the pullback ended up finding out that it wasn't just a pullback. Three minutes in, market just kind of bumping around a little bit, not doing a whole lot. S&P was bullish, now it's bearish again. Who the heck knows? Now that we've got the RTH, is it too big of a gap today? I don't think it is. Not enough to make the chart look weird. Nah, yeah, it'll be all right. Good. Big drive to the downside, breaking back lower. We've got 30 seconds until the first 5 minute is in. Dipping down back into the support zone, but we've already kind of had the bounce there. It's sort of done. The 14.910s POC on the S&P as well. Oh man, 4401. Yikes. They've got some issues. First 5 minute POC on the NASDAQ, 14.910 on the S&P, 4401. Oofta. That's not good at all. Here it sits. Sellers trying to break down to a new low on the NASDAQ. Getting real hung up at that previous swing, though. Where are we at in the bigger picture? The S&P still has 20 points to go. It's just a little bit. Now churning through. Likely any longs who are trying to build into the 900s are feeling under pressure if they didn't get out on the original target zone. And when it comes back, we'll probably see them start hoping that they get out at break-evens. Don't know if that's going to happen yet for them or not, but we'll see. S&P looks like it's ready to just blow off the floor. This looks like it's got some real bearishness in it right now. The problem is it's really far down here. Yeah, this is the 850s, so it's a touchy spot. You know, how do you short into a known zone of support? This doesn't seem like that good of an idea. If I wanted to go short, I would have rather shorted up where I was taking my profit and selling those, but instead of selling longs, I would have rather just been shorting them. Oh well. I can't believe how much distance these candles are covering right now. It's crazy on the NASDAQ. On the S&P, starting off the day, we've got, well, I mean, effectively, still this giant gap that's gotten left behind at 43.55 quarter. Yesterday doesn't look like the Bulls won any fights. It's just, I don't know. Man, this thing just feels like it's staring off the edge of a cliff. This is the potential spot where options to the downside, because it feels like it's still challenging and quite risky given the location. I would rather look for an out-of-the-money option play, knowing that the volatility is high, and if I'm wrong, I'm just out whatever it costs. You know, to me, that is a more logical play, safer play. S&P, POC, shifting down to 86.50 and bouncing. Sound like freaking Dr. Seuss over here. NASDAQ trying to press down. And here it sits. A little bit slow. Market's trying to figure out what it wants to do. Shiba's pulling back pretty nicely now. I mean, if the bulls are going to gain a continuation phase higher on SHIB, then they don't really want to break through 23.55. That would invalidate things. So bulls are going to want to try to hold above that, preferably 24s and higher. S&P and the NASDAQ now both have bottom-weighted POCs, potentially shifting the gears of the market a little bit. Hey, total side note, just as a by the way, for those of you who are fans of like first-person shooter games or anything, on Steam, they've got Battlefield 4, was it 4, 3, it's like 3 different games, and it was like $11 for all 3. So I was just throwing it out there, going into the weekend, if you're looking to, you know, pump some virtual rounds into some virtual punks. It's on a massive sale right now. I really like the Battlefield franchise, but it's like 92% off or something like that crazy. I couldn't resist that. Not only making as money, saving as money. Hey man, if I can pass on the savings, I'm cheap, and the less money I have to spend, ooh man, the better. I'm a happy camper. And when I can get a hot game like Battlefield at 92% off, yes please. Yeah, me too. I had a lot of fun with BF4. And now that they've got like the 1700th rendition of Call of Duty's World War II, I mean, you know, it's like, how many times can we rehash that one? I wish they'd go more futuristic. They do really well when they do that. I loved Modern Warfare and all those from the Call of Duty franchise. Those were great. And we always end up going back to the M1 Garand. I want to see through walls, man. I just like the destruction physics. You can't hide in a house in Battlefield, because I'm going to blow the house up. You're a proud owner of some upland properties. Yeah, buddy. Nice. That's awesome. Welcome to the NFT property ownership family, my friend. It gets addicting, I'm telling you. It can get really addicting. The same thing with like that $1 a day crypto strategy with Crow or Bitcoin or whatever you like buying every day, if that's your jam. Man, that's addicting. You go out and you know, my kids love going to McDonald's and stuff. I love McDonald's, don't get me wrong. But every time I'm there, it's like, okay, I'm not gonna buy a sandwich. That's about $3.50. So I'm gonna turn around and buy $3.50 a Crow or $3.50 a Bitcoin or something, and I'm gonna put it in my DeFi wallet. Those are the little games that you play, and you find yourself kind of getting lost in that game. It's addicting. And then you buy a property for like a couple thousand, then you sell the property. Oh man. What in the heck? All right. S&P reaches all the way back up to the POC. If the longs were long from there and they realized that they were SOL, they just jumped ship on the 917s and 4401s. Is it? Nice, Duncan. Yeah, I'll have to pay a little more attention to it. I mean, these value areas can be, regardless of where they're forming, when you have a lot of people doing something there, it's kind of the herd mentality, you know? When you realize that the herd's wrong or right or whatever, you can kind of count on what they're going to do next. Oh, man. Gotta say, I'm not a huge fan of this really quick new high and then lower, 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 lower. Oof. Being super careful because it's Friday. Yeah, I don't blame you. Ooh, boy, howdy. I think we have some proof here that the bulls might have jumped ship, and they're feeling under pressure pretty hard at the moment. Wow. For the S&P, on this slight rally up, we're kind of coming back into that previous zone. Sellers have not been able to trigger underneath the previous bear bar, and settlement is underneath it. This is purely scalping territory. There is no swings to be had inside here. Gold catching a dive back pretty hard. First zone of interest for long is going to be down in the 71s, but you're catching a falling knife right now. And it looks like it might be pretty sharp. They start triggering below this bull bar, that would be a sign that sellers may try to take over. Ooh. Big flush to the downside. No new low yet, although they are definitely in the driver's seat. Double bottom. Uh-oh. Okay. Higher low bounce off the lows. Gold's still getting absolutely thrashed right now. Double bottom to the tick on the NASDAQ, bouncing back up. S&P also kicking back higher, although there's still 2.5 minutes left. This could just be a reload for sellers to push back down. And if they show up with enough bearishness, that would be the potential spark. I hate the double bottom on the NASDAQ. This whole area is just really not so nice. Crude oil seems like it's barely conscious. Doesn't even know what day of the week it is. Sellers attempting to take back over here on the NASDAQ for this downward pulse. They've got about 1.5 minutes. It's not a whole lot of time. Man, this thing is a coiled up spring. There is a lot of volume going on here. Just back and forth, back and forth, back and forth. Pushing back to the upside again. That double bottom, I think, is messing with people. Where did you start out, Adam? Start out in San Francisco, or... Crude oil bulls, although it looks like the bulls are barely conscious here, they are building up a lot of pent-up aggression. This could pop to another new high into those 80s. They're still really trying to get that move. This candle on the index is going to look like garbage. Oh, sellers were too late. They tried to take it back last second. You missed it, algos. They obviously didn't win the bid for the fastest internet line. Bakersfield, all nice. Sellers trying to pulse back to the downside now. Bulls likely getting trapped on that big bull bar reversal back to the upside, thinking that it's going to pop higher. One of two things is going to happen, and right now the POC is at the bottom on the NASDAQ. I have concerns. If the longs are looking to get out of their, or the shorts are looking to get out of their stuck shorts underneath bar 1, this is the time to do it. The S&P isn't helping that fight, though. S&P rotating back up. We're back to the POC. Pushing back down a little bit. They're fighting over it. NASDAQ obviously bouncing off the POC at the bottom, but now shifting the POC a little bit further up to 874 and puts it under pressure. The longs will be thinking, wait a minute, I thought we were just in control. Starting to lose ground underneath the POC on both sides now. Still have 3.5 minutes left on the candle. This is looking like they're gearing up to either really hammer the lows or catch a lot of people. It looks like it's gearing up for a trap, is what it looks like it's gearing up for. You can't buy anything on Upland. It says you need to be an Uplander. But I mean, you do have to make an account on their site and register and all that fun stuff. I don't know if there's... It's been a minute since I've registered, obviously, but maybe there's like a tutorial or something you have to go through before they'll let you do it. I'm not sure. Mess around with it this weekend, see what you're able to find out, and if you have questions, if I'm around, I'll be able to help out too. Well, as much as I can at least, but at least then I'll be able to load it up. I'm looking for a short here on the NASDAQ. I think the bulls just got juked, and I'm looking for this continuation pulse. This is either the spot where the bears rip it through the lows, or the reversal back to the upside happens. That was an incredibly aggressive trap either way. Not getting the move up, lightening the low just a little bit. They still have 30 seconds left on the candle. We're backing up to the POC. Final 15 seconds. Closed underneath it. Pulsing back up. I'm looking at this move up right now as a chance for the earlier longs who are trying to buy into the dip to exit. So I'm still definitely maintaining a bearish mentality into this. I just haven't seen a really good opportune area to add any additional risk on this yet. It's a little bit further up, more towards like the 890s. By the end of this candle, which still has like 4 minutes left, that's where we'll have a really good determining factor of what's going on. If it were just to go straight down, actual risk, it puts it back down in like the 59s or so. But the 2-to-1s are more what I'm looking at, and that's just back underneath the low. Getting close. Really? Okay. Got a couple minutes until top of the hour, right around the corner. There's no news at 10 o'clock, really, but still, top of the hour. Where the heck is my drawing? There it is. Downside objective at the moment's like the 53 quarters. I got to see him follow through a little bit more. There we go. Nice little flushy dip. First objective's off down there. Next area is going to be trying to maintain for the larger follow-through. Because again, I'm viewing this as a break-even point. Traders who were trying to go long failed, and they used that last pulse up to get out. If this closes underneath the POC, that confirms that suspicion. So the more bearish this gets, the better, obviously, but it's got to stay underneath 872. They got a minute. Ooh, yeah, there we go. Now we're getting some spice. Nice little breakdown. Nice little breakdown. Keep going. They've got like 20 seconds left. Down into the 2-to-1. There it is. Beautiful. No, 3-to-1, sorry. Woo! Beautiful slide. Had to deal with a little bit of heat, and with the volatility on the NASDAQ, I wasn't about to hold into very large positions. You'll notice I was exiting a couple for losses inside there. I'm not going to hang on to NASDAQ on a Friday with volatility like that, but nice continuation down for the 2-to-1s, 3-to-1s. If you do feel the aggression and you're, I'm not going to trade that much and hold on to bags on the NASDAQ, but there are some downside objectives that still stretch below the lows. It's a nice bear bar. they close back down again. We are after 10 o'clock. Really nice continuation down. And like I said, I'm going to be ducking out a little bit earlier here. I've got some things to help out with. So let's take a look. How has this week from a numbers perspective gone? And I think... yeah, there we go. All right, I don't care about the dollars and cents. Those are irrelevant. I just want to see what the overall percentages are for the week to make sure that the trader's math is in the right spot. Looks like the exit on those shorts was just about the right spot, huh? So as far as for the week, including all of the different markets, I've got 91 total trades, 69.23% accuracy. The average trade is a 0.5 to 1, which makes sense because there was a lot of building in and exiting with some of this volatility. But if you look at the overall largest, we can still see that it's hovering around a 2 to 1, which is where it needs to be on both fronts. So generally speaking, it's still doing what it needs to do. But if we're going through and following the math, we got to make sure that the math adds up. So we've got 100 minus the 69.23, that's 30.77% accuracy wrong, times an average loss of 98, and 69.23 times the average win of 58 minus 30.1546, which means that we... oh, really? Really? 999.88. At least it wasn't 0.99. So again, we know that the trader's math is in the right spot. We know that everything was working out the way that it should have been. Nothing was out of whack or anything crazy. There were some losses along the way because that's how trading works. But in the end, all of the numbers work out. So it's a pretty good week. Triple bottom. I mean, yeah. This thing's crazy. It went one tick down to a new low, right? One tick? The low was at 87.50. Oh, no. Well, 47.50 went down to 45.75. Basically one tick as far as the NASDAQ's concerned. All right. Well, like I said, I'm going to be ducking out a little bit early, but if I miss any questions or if you have any questions that I didn't have a chance to get to, you can always shoot me an email, jhb@ssftg.com. Enjoy the weekend. Like we always say going into the weekend, make sure to take some time away, right? Do something that you enjoy doing outside of this. I know, obviously, we enjoy doing this. This is an addiction, really. But you got to get your mind off of this stuff, you know? When we go through a day, regardless of the day, we make more decisions through one day than most people make in the course of a week. We got to give ourselves a mental break so that way you can come back on Monday ready to rock and roll. Yeah, play some Battlefield, right? Is it going back up now? I think the shorts really lost the battle on that one, and if they close back above the POC, it's game over. The S&P is already kind of showing you it's game over, but the NASDAQ's still got some room. The first 5-minute POC is the last barrier. That's up at 14,910. We'll see. Anyway, enjoy the rest of the day. I hope you had a fantastic trading week. I hope you had a fantastic trading day. And like I said, if you have any questions that I may have missed, shoot me an email. I'll get a hold of them from there. Otherwise, enjoy, rest up, and we will see you all back next week. All right? Have a good one. We'll talk to y'all later. Thanks.